So let's just let people join in. So for those of you who are joining us on Zoom, I could see your questions. I might be able to see everyone on YouTube and Facebook and all that. So if you're joining us, if you're watching the recording, I suggest you just move on to minute number 5. That's where you'll be able to probably go through the content. If you're joining us right now, let me know in the chat where you're joining us from. Okay, so YouTube is on, Facebook on. All right, so yeah, we're just posting the chat. Let me know where you're from. For those of you watching the recording, just move to minute 5, 10, something like that. That's where we're going to start the content. But yeah. All right, let's see the chat. So I see people from South Florida. So Greg from South Florida, Camila from Florida, and Tony from Arizona. Nice, good having you guys and gals. Dan from Brevard County, Florida. A lot of Florida people, nice. Muse from Alexandra. Nice, nice, nice. Let's see what's up here. And let me know, when did you hear about us? I'm curious about me, about acquisitions.com. Just curious about kind of like who we have on the call here. And I'll just make sure I can see the chat on YouTube as well. And for those of you on YouTube and Facebook, on the call here, oops, now you can hear me. You could look at the description and you're going to see the links on how to register for future lives that we're going to do. And we're going to do lives every 2 weeks. And actually today I'm going to announce some new lives that we're going to do every week. So for those of you who are investors, or for those of you who potentially want to just find deals for a living, we'll have an opportunity for you as well, which I'll probably talk about. Might even start a conversation about that as well. All right, so YouTube, a few months ago on Facebook, YouTube 2019, damn, nice. Old school, Ralph, nice. Michael, YouTube, New York City. Good stuff. So you know what, I'll get started with that actually, with letting you know about few more calls that we're going to do. So if you guys are not subscribed to my YouTube channel or not in our Facebook group, then I highly suggest you to check both. My YouTube is just my name, which is Moran Pobert. I'll just write it down in the chat. And for Facebook, I suggest you go to Business Buying Mastermind, because that's where we'll share about those announcements. So let me start with those new communities that we're building, basically. Let me share my screen real quick. Get out of those Slack notifications. Recording. Okay, cool. So let me share with you a few stuff, right? So right now, for those of you who don't know, what we're doing with acquisitions.com is we help people buy businesses, right? So acquisitions.com, right? What we're doing. If you're thinking about this world of acquisitions, what that looks like, oops, like what that looks like overall, and what we're doing is for you to understand, right? So right now, what we're doing is we're helping basically future CEOs. All right, so anyone, future or existing CEOs who want to buy their first business or grow their existing business by acquisitions, right? That's what we're doing right now. That's our focus. If you're following us, that's probably what got you here. Moving forward, we're going to open, to begin with, they're going to be free communities. One of them is going to be for investors. Because in 2022, one of the things we're probably going to do is to raise a fund that will invest in our CEOs. just because, I mean, we have so many deals coming our way that it's just ridiculous not to give opportunities for investors who want to diversify their portfolios, especially now with what's going on in the market. We're just, it's just things are too messy. Like, where are you going to invest all your money? In crypto and stock market? So what we're going to do is to allow accredited investors to begin with only to invest in basically small business acquisitions, in our CEOs. We have a lot of deal flow here, but what we also going to, so anyway, what I'm trying to say is that every 2 weeks, we're going to have a Q&A call, with content, with Q&As, with guest speakers for investors, right? Every 2 weeks, which we already do, we're going to have a call for CEOs, which we kind of like already do, talking about acquisitions. And then what we're also going to add is a call for scouts. So scouts are people, especially people who are just getting started. They don't necessarily want to, do all the deal themselves. They just want to find a deal. So they want to find a deal and get paid for it. And I mean, in some of my deals in the past, we paid like multiple 6 figures for people just for finding deals. So it can be a great opportunity for you guys to find deals and send over for profit. So imagine if you're able to just refer like 1 or 2 deals a year and get like 6 figures per deal that you refer, right? So this is going to be every 2 weeks. This is going to be twice a month. This is going to be once a month, and this is going to be once a month. So again, if you want to make sure you're joining those calls, they're all going to be free to begin with. Then make sure you are in our subscribe to my YouTube channel, in our Facebook group, or go to acquisitions.com and just make sure you're in our email list. We'll probably announce it there as well. So investors will have the option to see deals first. Investors are investors clubs, basically. So it's going to be our acquisitions investors clubs. And this is going to be our scouts. And also with our CEOs, which we're already starting to do with few businesses, is we also going to have, when we're investing in those businesses, we're also going to have a concierge service with them. So a process to make sure that our CEOs are getting support. We're not just sending them money and, throwing money on them. We're actually supporting them in the process. We're keeping them accountable, using best practices, making sure they're not hitting breakpoints, etc., etc. So that's kind of like the plan moving forward. So I just thought it would be great to share that when we're starting. Now I want to go back to the topic. Anyone knows what the topic for today? Did you see the email? I'm curious. What am I going to talk about today? Which is kind of like an intro to this part, to the investor side of things. You'll basically get an opportunity to see some of the stuff we'll talk in the investors club. I'll share that with you today. Let me know in the chat if you saw the email and know what we're going to talk about today, though. I'm curious. Just want to see how many people receive our emails. And also, let me know, are you excited about this potentially making money being a scout, or making money as a passive investor versus doing all the deal yourself? All right, cool. So today we're going to talk a little bit about the difference between investing in a stock, so investing in stocks versus private businesses. And yeah, if you guys have questions, anything, I mean, stay until the end. In the end, I'm going to open things up for questions. All right. So anyone can tell me in the chat, like, what do you think? What do you think is the difference between analyzing a stock and investing in, or sorry, between investing in a stock and investing in a small private business? What do you think? Do you know the difference? And yeah, for those of you who don't know me, yeah, my name is Mohan Paber. I'm the founder and CEO of Acquisitions.com. Right now, we're the largest community when it comes to M&A and roll-up entrepreneurs and investors. We were involved in more than 100 multi-million-dollar deals in the last 3 years alone. We're now also looking to, in the next year, look for scouts, invest in companies, and just support roll-up and acquisitions entrepreneurs overall. So yeah, that's for those of you who just heard about us. All right, so I'm looking at some stuff. Liquidity, risk, predictability, good stuff. All right, so let's write some of those to make sure we're going through them. Actually, you know what? I'll get to that later. Let's start with kind of like some thoughts that I have. So first of all, investing in anything. I mean, you know what it looks like. Like when buying a stock, you're basically buying a piece of a business as well, right? Even if you're buying a small percentage of a large business, you're still buying a percentage of a business. So it's basically buying a business. You usually are not buying a majority. You usually don't have any say. And I think before I go to the details, remember that it's hard to make money, guys. And it's not hard to throw money into stocks. It's just like nowadays with some of the apps, it's just like a one-click thing. So you really want to do your homework before throwing money on things. And most people just look for the price a lot of times. I just see people look at the price. And if they can pay for the stock and they're excited about the story of the company, they just buy it. And unless all the market goes up, it can be a huge risk if you don't know anything about the company and you don't know how to look at the business. So I think a cool way to maybe look at it is like when you're investing in a private business versus a public company. It's like the difference between investing in LeBron James when he was in high school and not famous yet, or even before high school, versus investing in him right now, kind of like, you know, in the NBA after a few championships. And the way I'm looking at it is like, think about your upside when investing in LeBron today versus the upside investing in LeBron when he was 17 years old or 16, right? Imagine if you could get a percentage of LeBron James' future earnings when he was 16. Would you do that? Of course, knowing right now where he's at, but would you do it back then when you had a lot of risk? At the same time, imagine if you put that money, and I'm going to talk more about that in a bit, but your upside can be much higher, but also your risk. So as part of your thoughts as an investor, you need to think, okay, how much risk do I want to take and how much perhaps more investments in some more stable companies or stocks I want to have. So either way, if it's a private or public company, here are some of the things that I think you should probably look at, right? So first of all is revenue growth. Right, so revenue growth. So revenue growth, obviously, it's nice to see, right? You always want to see revenue growth if you want. And of course, if you see a company that grows fast, then you can probably pay them more, right? So for example, if 1 year a company did 10, the next year a company did 12, and then the year after they did 14, right? It goes up. Guess what? They'll ask more. Right, so you need to ask yourself, of course, look at the last, so let's say that's year 1, that's year 2, that's year 3. Look at the numbers, are they going up or not? Is it consistent? Or is it like 1 year 10, 1 year 8, 1 year 12? Right, that's another thing to look at. Ask yourself why there's no consistency. And also ask yourself, okay, now when we're thinking about public versus private, ask yourself, do you like when the numbers are going up or potentially not consistent or potentially even going down? Like what if you would see company doing 10, 9, and 8? Would you be happy seeing that? Depends, right? Are you looking to do a turnaround deal? Are you looking to invest in growth company? Do you have any control or say in the business to change things? All right, that's some of the stuff you want to think about. So revenue growth is the first thing you want to think about. Second thing is profit growth. right? So does profit goes up or goes down? Definitely want to look at it. I don't care if it's a private or public company. Again, is it consistent? Consistent, right? And if the business is failing, the profit is going down, it's not looking good. If the company profits goes up while revenue goes down, that's another thing you need to look at, and vice versa, right? Of course, if the profit goes up while the revenue goes down, it means that there's something good going on in there. It means that the operation is better, something is working well. If the profits goes up, if the revenue is staying the same. And of course, you can look at margins as well, but I want to keep things really simple right now. Next thing we can talk about is free cash flow. When I'm saying free cash flow, free cash flow is basically the money that the business can then use to pay dividends, to pay debt, to grow the business, to do acquisitions. So can I see consistent growth in free cash flow, right? From the core business. I want to see cash flow from the core business, from the actual operations of the business. Otherwise, again, if we have problems with cash flow, then it's a turnaround deal. And I need to ask myself, is that a business I want to be involved in? Do I have any say? Can I take control? Can I be responsible to make any difference? Can I trust my skills to make any difference? And then do I want to be involved or not? So free cash flow. Then we can talk about, especially if you guys investing in the public markets, we call it PE ratios or PE ratio. All right, PE ratio is basically price divided by earnings. So what is it for you? And obviously the numbers are going to be different in a public company versus a public versus private. And in the public, anything above 20, like for me, I'm like, okay, do I want to be involved at all? It's probably usually very fast growing company. Sometimes just because of there's some kind of a hype, then they're getting huge multiples, huge PE ratio. And obviously if there's hype, especially in the public markets, then everyone wants it. You can also see it in private markets sometimes. Like you see companies like Clubhouse that got valuation of a few $1 billion and they never made a dollar, never. Cool, so they had databases and future potential and great VCs, but so what? Right? Amazon got like 120x last time I checked, P ratio. In private companies, that's Amazon. In private companies, I mean, you can buy companies at like 2-3 times. Right? Obviously, you're not buying Amazon, but you can buy really good businesses, you know? So you need to ask yourself, what kind of returns can you see here versus here? Of course, you're not doing the same amount of work in Amazon versus in private business, but sometimes, so what? Sometimes it's, you know, what else you got to do? Sometimes doing the work is good, it's fun. So that's another thing I'm looking at. What else? I want to look at total current assets. And I want to make sure that it's bigger than total current liabilities. That's something you can check in the balance sheet. So I want to see that there's enough money to pay current liabilities fast. For example, if you owe someone $15,000, but you only have $10,000 in your bank account, guess what? You're in trouble, right? So all those things you slowly want to go through and ask yourself, can I put a check mark, right? Can I put a check mark? And if it's not a check mark, okay, what kind of deep dive due diligence I need to continue to do to see if it's a deal worth my time and my money. Next one I like to think about is profit margins. Profit, right? what do you think is a good profit margin? I would say that, I mean, anything greater than a 10 is something that worth potentially looking at. Like, I don't know if anyone looked at like a supermarket margin. It's insane. It's so low. I don't even know how they operate those businesses, seriously. When you have softwares, for example, technology businesses, you see much higher margins. Why? Because there's not a lot of like expenses per sale, because you can replicate things really easily once you make things once, right? Versus other businesses, there's a lot of expenses with every new product you sell, unlike softwares. So profit margin, definitely something I want to pay attention to. Next one is operator or CEO. Let's say CEO, right? So who's the CEO? Do you like him? Do you trust him? Does he have some background, credibility? Is he committed to the business, or is he committed to his income? Is he incentivized to grow the business, or is he incentivized to just do as least as possible and just still get paid? Like if you look at Elon Musk, I think one of the things that people really admire in him is that if you Google Elon Musk's compensation plan, the reason he became one of the richest people in the world is because he had a compensation plan that earned him, I think, like a 1%. I don't remember the exact details, but about 1% in Tesla stock for every $1 billion in market values created. That's how you become the richest person in the world. And there's even a video somewhere of someone laughing at him, like, who would do that? What are the chances that Tesla will get there? Like, no one believed in that. He did, and look what it got him, right? But what I'm saying is that his compensation was in direct proportion to the performance of the company. So if you believe in Elon Musk, if you believed in him 10 years ago, then guess what? You probably did really well. But if you would see other CEO that get most of his compensation from, just a flat rate income, then guess what? He's not going to be as incentivized and motivated to grow the business. So the CEO play a major role as well. What about management in general, right? So can call it management. Let's call it management for now. Management, governance, like who's in control in making decisions? Is it one of the shareholders? Is it the CEO? Is it someone else? Is it the board? Is it a combination? And again, here the difference in public and private businesses are very different, right? In public companies, unless you're playing a big part of that, you obviously can say nothing. In private, you have more of a say, especially if you're a key player in there, right? So this is key with the CEO as well, how much control he has. And that's why with our fund this year, we're going to look at thousands of deals because we have access to so many people in our network, we can look at so many deals before making the decision on one. So just like access to deals will give you more options. Another thing I want to look at is amazing product. Right? When you look at a company like Apple, why do you think they're so good? Their products are just freaking amazing. I can't imagine myself having any technology product that isn't Apple at this point. It's just ridiculous. Right? I don't even think twice. Why? Because I'm so used to everything that they're doing. And when I'm trying to touch like Windows stuff, it's like I'm feeling weird. Right? So amazing product. Like their earpods that they just created, they did more revenues than most businesses ever will. Right? They have great distribution. They brought another great product and they're just killing it. And then I will add another thing that I really would love to see is recurring revenue. Why recurring revenue? Because in the end of the day, I don't care what business you are, it's easier to get a client back to you versus to find a new client from scratch. So when you have a business that's bringing clients back again and again with some kind of a recurring model, then it's brilliant. Or if you can be someone like Apple, they're just constantly producing, creating new innovating products. And obviously they build such a brand, they have such a distribution that as soon as they launch a new good product, they can promote it to all of their existing database. So that's definitely something to pay attention to, right? What distribution channels they have and what products they have. So those are kind of like the main key things that I want to look at. Of course, you always want to think about what are you paying, who's in control, the ratios, access to liquidity, right? Obviously, in a private business, you're not going to have as much of a liquidity, but your upside can be much better. You can have more control. You can have a say in the business. You can really know what's going on versus in a public company, you don't know. Every few years, you have a company like Enron, or there was another story in Germany 1 or 2 years ago. Multi-billion-dollar company just collapsed, had to bankrupt because they had some messy things going on there internally, right? And you don't know that usually if you're just a passive investor in those companies. So when you're looking at deals, public or private, you want to start to think about those things, and you want to start to think, okay, do I have some kind of a red flags, right? Do you have some red flags, or do you have a check mark? That's a red flag. Otherwise, if you're not looking at those things, you're just investing in random stuff just because you thought it's cool, because someone told you it's cool, because everyone on Robinhood's telling you that's cool. And don't get me wrong, like there were people who made some money last year, but in the end of the day, you need to remember that you need to understand and look at the whole picture. And investing is an art, it's not a science, right? So you need to keep that in mind as well. Of course, the price, how much you need to pay for it versus the red flags, and are you willing to take those risks? And everyone here is in a different situation. Of course, you can also use leverage or not, sign personal guarantees or not. So in private business, let's just kind of like go back. In small businesses, private businesses, when they're still small, you have much more chances to get a say in the business and have an impact on the business and product. And you can start early, so you can potentially see 100x, 1000x on businesses if you do roll-ups or have a really fast-growing company. If you're investing in a company like Amazon already, which I think is one of the greatest businesses of our times, but you're already trading at 120x. So, I mean, to grow from here, like the business just got to be perfect. And for those of you who ran businesses before, it's not easy. Like the fact that those guys are still growing in my mind is like, it's insane. It's just like taking my hat off. They're brilliant, right? But how much more of an upside you have from here? I don't know. Like, are there still so many people who don't know about Amazon? So they need to really innovate and come up with something really unique to continue to grow at that pace that they're used to and get those valuations. Also, what about a recession? If we're going to hit some kind of a recession, some of those fast growing companies in the public space can see drops of like 30, 50%. In the private market, you don't care about the price as much in the short term until you sell the business, because you invest for cash flow for exit. So only when you sell, you can really know the full return on things. Same with public companies, but with public companies, just, I don't care who you are, it's just stressful when you have access to see your stock price right away, all the time, right? So you can't tell me that you don't look. If you have a lot of money in one of the public companies, you're looking, right? In a private company, that's one of the nice things. You can have a quiet mind because the money is there, and you can just focus on growing the business, you or the team that you have. So also think to yourself, what's your risk appetite, right? Are you a person who is looking to invest to get 100 or 1000x, or are you fine with just like 10%? Right? And of course, it can be a combination, it can be diversification. But you need to ask yourself, would you rather, if you had the option, would you rather invest in LeBron James when he was, if you didn't know it's going to be that way, would you rather are you the kind of person that invests in people or in things with the idea of having 1000x, investing in LeBron James when he was 15? Or are you the kind of person who would invest in LeBron James after a few championships when you still have that, but the upside, the difference in jumps is not as big. And I think diversification is important, especially in the way the world is going on right now. So I don't care what you're investing in. I think it's important to have some kind of a diversification. At the same time, I also believe that wealth accumulation happens at concentration, and diversification happens when you want to preserve your wealth. But also, again, it depends on your situation, where you're at, and what you're trying to achieve. I think in order to preserve your wealth, diversification is the thing to do, 100%. And especially with the messy world we're living right now. I mean, crypto, real estate, stock markets. I think that not enough people know about the small private businesses space. And hopefully that's what will open to our investors club in the upcoming year. So we'll just be able to present deals to you, accredited investors only to begin with, to be able to expose yourself to that asset class. So yeah, if you enjoyed that quick video, let me know. And yeah, I'll take some questions now. So let me know, first of all, what is kind of like your biggest takeaway perhaps from this training so far? Oh, and yeah, for those of you who asked, by the way, about our incubator, let me share my screen again real quick. For those of you, let me go back here, who want to be this person here, the CEO, we just opened a group which calls our Acquisitions Buy Sell Incubator. So if you want to work with me for the next 4 weeks, and we're starting live, like as soon as we finish this call today, like within 25 minutes, you could join me live for our welcome call for our incubator clients. So the way it's going to work, first week, we're going to work on your thesis, figuring out what's the best company for you to buy. Then we're going to talk about deal flow, finding companies for you to buy. Then deal structures. So that's week 1, 2, 3. Sorry, I missed things. Sorry, deal flow is 1, and the thesis is just going to be here. Deal structure, then deal execution. So we're going to show you different execution. Lots of ways on how to finance deals using other people's money. And then also deal exits. So for the first time, I'm going to teach you a lot about frameworks on exiting a business. So this is what we're going to talk about. The goal is to get you an offer accepted. On a business doing at least 1 million a year in revenues in 4 weeks. So that's the program. It's 4 weeks. You're going to get access to tons of videos. So you're going to get videos, you're going to get templates, scripts, and 4 live Q&A with me. And again, we're starting live literally in 24 minutes. So if you want to join, it's probably the last time we're going to sell it live. So if you're interested, You go to acquisitions.com/buy sell. I believe that that's the link. Let me just double check that. And we're going to put the link in the chat as well. Sorry, it's buy, sell like this with no, 1 second, I'll share my screen again. Yes, it's acquisition, buy, sell like this. If you want to join us, it's only like usually if we're going to sell it to the public, it's going to be at least like a $4,000, $5,000 product. But today, if you're joining us today, you're not paying that. And again, we're not going to sell it to this price. So today, if you're going to join us today, it's only $997. So I highly suggest you to take advantage of this right now because we're starting. And then you could join me for our welcome call in 23 minutes. If not, you'll just probably need to pay more in the future and just go through recordings. All right, with that being said, let me go through some questions. All right. Hey, Maran, I'm looking to acquire businesses in the US in the next 3 months. I'm living in Turkey. Do you have a team in the US who can help me do this? I don't mind giving up some equity. Yeah, we definitely have a team, Tom, 100%. I mean, that's what we're doing. So if you want to work with us, work with me for 4 weeks. Tom, join me here. If you want to work with me for the next year, so 12 months, obviously it's going to be more expensive. So just go to acquisitions.com/apply. And you'll need to talk to my team to see where we want to see where you're at, where you want to be, and see if we can help you. Acquisitions.com. Go to apply. If you want 12 months support, go to apply. If you want 4 weeks, go to buy, sell. Just put some colors here. All right, so you have this. And then you have this, which is a separate way of working with me, just for longer time and obviously some more deep dive, more access, more support. So that's for you, Tom. I highly suggest you to at least start with this, see if that's enough for you. If not, then you could always join us in our accelerator here. Okay, Melody is saying more opportunities within acquisitions.com. Yeah, 100%. We're just getting started. That's cool. I like it. Thank you, Oleg. The first thing to look for, Greg, 100%. Now I build target for my companies. Oleg, good stuff. Yeah, we're here to support you guys. Like, this is just the beginning, guys. Like, you'll have, like, my goal for you guys is to help you buy the business, help you find, then give you the capital, then support you in operations. Because that's, and I'm not thinking from nowhere, it just literally support you guys asking us for. So we're just giving you what you guys want. One takeaway is that private businesses for most is an overlooked asset class. Ralph, 100%. I mean, most people just really don't pay attention to this asset class at all. By the way, for those of you who are not on my YouTube channel, I highly suggest to go for it. Like, because I'm starting with myself, kind of like a 30-day challenge. So I started recording a video today. I'm probably going to start to upload from tomorrow or 2 days from now for 30 days. So go to my YouTube channel if you want to see tons of new content coming up. But remember, the YouTube stuff is kind of like an overview. If you're going to like the YouTube, then you're definitely going to like the deep dive programs. And the fund that will invest in deals are only going to be for clients in our incubator or in our accelerator. The checklist to analyze before a company. Yeah, Camille, 100%. What is the outlook on SME M&A given interest rates are likely to rise? I mean, let's wait for it to rise first and then see what's up, right? But we have so many deal structures we're working on that it doesn't matter. And in the end of the day, people will always want to invest. And that's what we are allowing people the opportunity to invest in deals. And if you have a good deal and we can trust you as an operator, then that's what matters long term. Having skills to identify the red flags and check marks is important to me. Antonio, awesome. Love it that you got some value. Camilo, if you bought the incubator, we're going to send an email. Probably send it right now. So check your email or check the members area. You have a link to the Zoom call, which starts literally in 18 minutes. So I'll see you there, Camilo, as well, in 18 minutes on a Zoom link. And if you're not sure, we could probably send it to you here in Zoom as well. One of my team members could probably send it to you right now, Camilo, like the Zoom link for 15 minutes from now. Oleg, thanks. Yeah, thank you for being here. I appreciate you guys taking the time. I don't take it for granted at all. Christopher is saying my credit is not the best, but currently working on it. Would the incubator be an option, or should I take the 12 months program while credit is being repaired? I think it's better to get started because the incubator will build you so much momentum. Within 4 weeks, you can have an offer accepted, and you'll see that you might not need even a good credit with the deal you have. Obviously, having great credit is good, but you have other deal structure that you can use that won't even require for you to raise capital. I am interpreter. Where would I fit? You're talking like where would you fit, like buy, sell, or incubator? The way that I see that, if you know acquisitions is for you when you want to go all in, I would say go here. Like, but remember that this is just more expensive. Right? So ask yourself, am I all in? Do I want to support here? Like, you're going to get access to me, to my team every week. You're going to get a one-on-one calls with my team. You're going to get calls with me. You're going to get my CFO. You're going to be basically a full team here for 1 year. Rolodex of institutions. There's just so much more details here. You get a lot, and within 4 weeks, you'll be like, okay, I got an offer accepted. Now I know I want to go all in. I either close this deal on my own, or I want to do deals for the rest of my life and I join Accelerator. That's the way that I see that. So if you're just thinking if this is for you or not, acquisitions, then start with Incubator. But if you're like, dude, I want all in and I want to make sure I do it as fast as possible, then go Accelerator. Just to be clear, is it possible for me to buy a business in the US without being there physically? Tom, the answer is yes, 100%. I have a business in the US right now, and I'm not in the US. I had businesses in the US in the past, and I wasn't in the US. I had businesses in different countries in the past, and I was not in those countries. At one point, I had businesses in the US, UK, Canada, and Australia, and Panama, and Cyprus, and Israel. And I can't be in all those countries at once, right? So it's definitely doable. You just need to understand the nuances of how to make sure you're not getting screwed. Yeah, thank you. 3 projects to move forward, needed a lot of help. Charlie, we're here to help you, man. I'm in a position as Camilo, but we'll look for the links. See you soon. Yeah, for those of you joining Incubator, like go to acquisitions.com and log in there. You'll see in your members area Incubator, and you'll see the link in there, or check your email. So you should get the email and the portal as well. I'll see you in 15 minutes. So I'm looking forward to see you as well, Muse and Camilo. All right, let's see if there are some more questions. Interrupters. How about interrupters? Those that change the game? I'm going to try and understand the question, Charlie, see if you can rewrite it. I'll help. If not, Yes, this is, those are asking, that's YouTube. And also remember on Facebook, guys, I highly suggest you to be in our group, which is business buying. Business buying. Mastermind. Just search that and you'll find out. Cool, guys. So yeah, my goal, for those of you enjoying Incubator or apply to join Accelerator, I'm looking forward to work with you or see if we can work with you. For those of you who are here, I'm looking forward to support you in our Scouts community, in our Investors Club, and in our ongoing, basically CEOs calls. So I just see one last thing, question. Yes, changing the game and everything, awesome, good stuff. Can you give us a range of the amount of money someone should have in case he's buying with his own money? Tom, I'm not here to sell it to you as a get rich quick thing. In the end of the day, we have people who bought multi-million-dollar businesses without putting a nickel of their own money. So at the same time, I don't want to, I think that if you are just not at a position to understand what that looks like, you might not believe in it. But I would say that your ongoing expenses will just be different softwares that you'll use, or traveling to businesses, which you don't necessarily need at this point. You can just do Zoom calls. If you have a lot of money, it's always good because you can put your money into deals, but you don't have to. That's why we're showing you how to use other people's money. Yeah, so you can look online. We have dozens of case studies of people who bought multi-million-dollar business without putting a dollar of their own money. Ralph, Moran, please have Martin contact me so I can pay the bonds and for the link for the 11 a.m. first incubator call, Ralph. Awesome. Yeah, Martin should be able to see that. All right, guys. So I'm looking forward to see some of you yeah, Ralph, looks like we already replied to your email. I'm looking to making it to $100 billion conglomerate. I love it, Charlie. And we're here to support people like you who want to build those level of companies. That's what we're doing. All right, guys, on that being said, looking forward to see you all in future calls. And for those of you in Incubator, see you in 10 minutes. Have a good one, everyone. Take care.